Welcome back. An important part of the economic recovery is to see businesses willing to borrow to invest. Dr. Frank Gelber just talked about that. My next guest is the CEO of First Class Capital, and so let's see what he thinks is going on in the business sector. Prout, nice to meet you, mate.
You too, Peter.
So tell us about First Class Capital.
Yeah, so First Class Capital is all about providing loans to small business. Most of our loans are structured in ways which help small businesses with their cash flow management and working capital.
Okay, so I've seen the ads over the years, but where'd you come from? Like, where did your business start?
Yeah, so we started about 2.5 years ago, building our systems and our procedures and our funding arrangements in place. We saw, maybe going back about 3 years ago, a big gap in the marketplace. I mean, largely the banks, in many respects, have underserviced the SME space. So many small business owners are struggling to get access to finance, particularly finance in ways that can help them manage their cash flow, their working capital, their inventory to help them grow.
Oh, of course. So where do you access your funding? If the banks are showing hesitancy to lend to SMEs, where are you getting your money from?
Yeah, so the banks, I suppose, are subjected to the regulatory or prudential capital requirements, and those changes over the years, and there's a third round coming up, as you know. They have tended to favour allocating capital towards bricks and mortar based lending. So essentially they've tended to steer away from or reduce their exposure to non-property based commercial loans. Our funding basically comes from the institutional markets outside of the banks.
Okay, so some of the big names in investment banking could find money for you.
Yeah. So I mean, I have an investment banking background, so we had the luxury of being able to put together some of the funding structures ourselves.
Yeah.
But ultimately, we've put it together in a way which can meet the small business owners' requirements.
Yeah. Now, obviously, what is the criteria that you use to assess risk as compared to the banks?
Yeah. So I suppose we do have credit policies and procedures and decision-making rules, but ultimately we don't take property as security. So it's a major point of difference between us and the banks. So we look at the small business owner, the health of his or her business and the outlook and what can happen to that business if we provide it with the working capital and how that can change the business and help it grow. And that, I suppose, is a different way of assessing risk than that at the bank.
Is there a big interest rate difference as a consequence of you doing the stuff that a lot of the banks won't do?
Yeah, so but the other thing that we do differently is we provide funding. Yes, that's the main part of our business. But we provide supporting services. So we actually enable a small business owner to do things like manage the credit risk they have when they extend credit to their customers and then help them collect payments. Two areas that small businesses struggle with is actually extending trade credit and then collecting payments from customers to whom they've already provided services. So we help in both of those areas, and that tends to complement the way we provide the funding. So together, it's a total solution.
Okay, but I'm sure people listening would want to know what is the variation in the interest rate that they might pay on that kind of funding.
Sure, we have a range of products, but we have products that are in the order of 7.5% per annum on the funding component, and then there's modest service fees for some of the services that we provide in credit management and payment process.
You're accessible. You're not right over the top. The attitude to borrow now, like after the GFC, there was this attitude consumers and business didn't want to borrow. Frank Gelber saying that non-money business investment's improving, but still not where it's been. What are you seeing in terms of SMEs? Are they showing more appetite to borrow now?
We think there is. I mean, we think that there's an increasing level of confidence. I suppose the way we're positioned in the marketplace is that effectively what we're doing is we're delivering capital in ways which enable the small business owner to increase their sales. So what's interesting is if a small business owner is looking for new ways to differentiate themselves in the marketplace, that First Class Capital can help them. So we're actually providing loan funds not just as an alternative to, say, equity or other forms of funding, but we're doing it in a way which can enable them to extend further credit to their customers, much like insurance companies and some of the major retailers do when they offer instalment payment arrangements. So it's the way we deliver the funding which is quite different.
So you're saying I'm a small business, I can't really afford to give any better than, say, 30 days credit, but maybe by working with you I might be able to give 60 days credit.
Either that or the fact that you are extending the 30 days credit means you've probably got a large amount of money tied up in debtors, and that can restrict your growth. And so we help them in that area.
And a lot of small businesses because they're afraid of cash flow problems, only give 7 days credit. And a lot of big customers just don't want that, do they? So it closes the doors on certain business relationships.
Correct. And I mean, and not only do small businesses feel compelled to have to give trade credit, but in many occasions they actually extend the credit without really knowing who their customers are. So we have services that can help them actually understand who it is that they're trading with.
Okay, so it's not just a matter of lending money, you actually create a bit of a relationship with the business in question.
Yeah, exactly right. So we try and give them a total...
If not only for their help, but for making sure that your money is actually safe as
exactly
well.
Exactly right. It's a win-win.
Yeah, well, it's like a stakeholder role as well. So what else are you seeing out there? You're seeing a little bit more of an appetite to borrow. You've been going for 2.5 years, so you really haven't lived through a boom in borrowing, have you? So it all lies ahead. What do you think needs to be done to get businesses more and more confident, do you think?
Well, I think ultimately, as soon as a business owner is confident about what's going on with government decision making, I suppose with what they're seeing in overseas markets to some extent, then they can probably feel a little bit more confident about investing in inventory. Also, I think it's interesting that one of the biggest challenges faced by small businesses is not actually just achieving new sales, but it's actually managing their cash flow. So I think one of the important things, and this is where we feel that we're helping, is actually just helping them become more confident about the timing of the cash flow in their business. And I think that actually enables them to make decisions more comfortably about inventory management and employees and other.
And I've also noticed a lot of small businesses kind of see it as a badge of honour that their overdraft is really small. But sometimes that small overdraft can limit their ability to work with a big customer. And so in a sense, I know in my own business, as our business grew, my overdraft grew because you had to, because you had more and more customers. Some of them weren't paying as quickly as you'd like, but it was a reflection of the health of the business rather than the fact that I was hiding behind or a requirement for debt. Do you find that to be the case?
I think you're right. I mean, Australian business owners, by comparison to, say, their European or American counterparts, are actually conservative. So there's only about 30% of small business owners have a form of debt in their business, whereas in the US and in the UK it's much, much higher. So there is a general sort of aversion to the use of debt in Australia. But if that funding is provided in ways which basically can help them achieve more sales, which is what we're finding, then their attitudes tends to change. And if they also can use sort of complementary services, then they don't just view it as being borrowing money, they view it as being a source of capital which can help them expand, which is quite a different mindset.
No doubt. Thanks very much for joining us, Prout.
Pleasure. Thanks.
Nice to meet you.